Live to the trading desk, Victor Adair waits there. Victor, it's interesting. I know you told us all that last week you were sort of stepping aside of the market while you were out of town. Here we come again. I bet it put a bit of your smile on your face when you saw the weakness in that Canadian dollar.
Well, I did take the week off, the first week of March, to go skiing over at Whistler, and I was aside the market. I just wanted to ski and not be worried about the market. But coming back, I had kind of a laundry list of things I wanted to do, and the top of that list was to get back on the short side of Canada. Let me just make a point here. I heard John Johnson say that he could see the Canadian dollar falling to 140 this year. To put it in the language a lot of us understand, that's 71.5 cents. That's 5 cents below where it is now. Canada's fallen for 5 of the last 7 weeks. We're at 9-month lows as it is. And John had a lot of good points, but let me add a perspective here that I think will be helpful. Canada is weak against a range of currencies, not just the U.S. dollar. For instance, so far this year, we're down 4% or so against the U.S. dollar. We're down 6% against the euro, 7% against the British pound, 3% against the Australian dollar, another commodity currency. And here's a shocker. We're down 8% against Mexico and 10% against the yen. What this across-the-board weakness tells me points the finger, as it were, at what I call self-inflicted problems we have in Canada. You know, it's not just because, Trump's a jerk or something that the Canadian dollar's down. There's some homegrown problems here that are making our currency fall against the rest of the currencies in the world, not the least of which are the divergent tax policies that we got. And by the way, 25% of our GDP is from exports, so that's really important. Now, the plus in a way is because we have a floating currency, that is the Canadian dollar falls, it is absorbing the shocks, okay, from our lack of competitiveness, from our bad tax policies. If we had our currency fixed, say, at par against the U.S. dollar, our unemployment would probably be, God knows, a huge number, and so on and so on. So the Canadian dollar falling kind of takes the shock from these other problems.
Let me just go a couple more quickly here. And by the way, that's a great point that you're making there. A couple of other things. Let's get. We talked about. What about the U.S. stock market? What are you seeing there?
Yeah, my big picture view on the market is that the break we had in February was not just another buy the dip opportunity, but was maybe a symptomatic of the market was truly overvalued. So, this is just a trading perspective. So I've been looking for this bounce back from the lows that we made in February to maybe run out of steam and the market trade off lower. I thought John Johnson, again, had some great points there, that the break this time was different than some other breaks, pointing more to worries about inflation rather than deflation. Certainly the tech sector has been by far and away the strongest. Some of the defensive sides haven't done all that well. To me at this point, it's just it's a trading opportunity. I'm looking to be, I am short, but I haven't got a huge amount of conviction in it. If there's something I've got conviction in, I do think, as John does as well, I think the U.S. dollar likely goes higher from here. So that was sort of my second thing on the list. And I got long of the U.S. dollar by going short gold. In other words, I shorted gold, bought the U.S. dollar. Mm-hmm. And the gold has moved almost up and down tick for tick with the euro currency, so it's sort of the same thing as being short the euro against the U.S. dollar.
Well, lots of stuff happening, and great stuff as always, Victor. Thanks for taking the time, and enjoy St. Paddy's Day.
Thanks, Mike. You too.